Good evening, everybody. My name is Michael Hobbs. I'm the founder of Flow Fintech Limited. We're into open banking and payments, but starting from payments because we identify some big problems with payments. Payments are effectively a retrofit of card technologies into the digital age. They're also a very expensive retrofit of those technologies. The clicks that we make when we buy things are exceedingly expensive. Retailers recognise this, but we should all recognise it as well, because ultimately the money comes from the consumer. So typically a large retailer is spending probably about 1 to 2% of transaction value on its card payments for a blend of credit card and debit cards. If you're a small retailer, it's even more painful because PayPal and Amazon Pay both start their pricing schedules at 3.4% plus 20p per transaction. We intend to make this cheaper, much, much cheaper. We believe we can contribute back to the retailer a lot of margin, perhaps as much as 0.25% to 0.5% into the retailer's operating margins. Now that may not seem a lot, but when you think about a typical retailer, they're operating typically around 4 or 5% operating margins. If we can eject that back into their profit P&Ls, we have a welcome conversation. Equally, we can inject something back for the consumer in terms of loyalty points as a recompense for changing behaviour towards the product that we're intending to launch. The product that we should be launching is not called Flow, it's called Ray. Ray, for those of you who are familiar with the history of money, is the ancient stone currency from the island of Yap. The discs don't move because they're about 1 metre in diameter, but the ownership of the discs changes. So they're the ultimate in trust currency. And we've applied for a trademark on the word Ray for use in the UK in conjunction with financial services. That trademark at the moment has been published in the Trademark Journal and should become ours in mid-July. So the first product will be called Ray Pay. Now we recognise that we've got to get a degree of consumer change because consumers are fairly habitual in the way in which they pay for things. They simply pull out the credit card or debit card that they've used for years and years, and that's the way they pay. So we need to incentivise a change of behaviour, and we tend to do it by linking payments to loyalty schemes. Typically, loyalty schemes put back about a penny in the pound to the consumer in terms of incentives and loyalty points. We believe that we can double that within the economic envelope that current payments allow us. How it manifests itself to the consumer is very simple. On a checkout, you would see an additional payment option button next to PayPal, but it would be incentivized, so perhaps you'd be doubling your points when you pay with Ray. And then the rest of the checkout process is defined by the open banking standards and actually operates against the consumer's bank account to put them into a familiar environment. The economics are pretty good. If we take a blended rate of 1.5p, we'd still charge the retailer, say, 1.25p. But we'd immediately put back a penny of that in terms of loyalty incentive payments, retaining perhaps 0.2, 0.25p for our own operating costs. Ultimately, we'd like to build a virtual bank, but RayPay is the first starting point. In terms of people, these are the grey-hair brigade, some senior players in payments and banking in the UK, two of which, myself and Jeremy Light, are ex-Accenture managing directors. The third, Steve Turner, runs a company that is concerned with the software that runs point-of-sale terminals, so a great understanding of how to engineer secure payment systems. And then the youth brigade is a group of people that I've borrowed from Imperial College as part of their MBA projects, and they're working for me at the moment. I hope some of these will go on to become our first employees. We are in the process of fundraising. We're at the seed stage. We've done a lot of modelling, which suggests that the company needs about 2.2 million in peak funding. We're starting with a request for 500 in seed funding. And we believe that we can make a profitable business of this by March 2020 when we become cash flow positive. Thank you very much.